The flashes on our screen, we have a possible provision being done by the government to address one of the key challenges, which is of course the oil prices. A windfall tax option is being mulled as a permanent solution to deal with the high fuel prices. This is of course an update that we're picking up from agencies at this point of time. The government may levy a windfall tax on ONGC as well as Oil India to soften the fuel prices. This is an important update coming in from PTI. Windfall taxes may be accompanied by a minor tinkering with excise duty rates. So this is an important update that we're picking up on at this point of time. Ajay, come in on this. How important an update is this, and what kind of an impact could we see on coming down on the prices?
Well, Karunya, analysts who have really looked at the oil sector for long enough would reckon with me when I say that ONGC turns out to be the favorite whipping boy whenever some big subsidy burden has to be shared, and this is how the source-based story is panning out. Agencies are quoting that ONGC could be the one where a windfall tax could be levied in order to share the lion size of the subsidy required for the price surge which has happened, and government is not being able to pass it on now with the same frequency it did in the last couple of quarters to the customers. In fact, if you look at Oil India and ONGC, the upstream companies, both are down 4%, trading as days low. We have someone who knows this subject extremely well, because Mr. R.S. Sharma, who joins on the phone line, has been the chairman of ONGC for a long time. Mr. Sharma, the ghost has come back to haunt ONGC as a company. How are you analyzing this story which is coming and the way situation is developing? ONGC could be made to share the giant burden once again. What are your thoughts, sir?
I feel, policy makers would be making a definitely a very wrong decision if they decide on that. Reason being, ONGC, Oil India, I'll not speak only for ONGC. They are already doing that windfall sharing with the government in the form of this oil cess, which used to be 2 years back 4,500 rupees per ton. Today it is 6,800 rupees per ton. The government has made this ad valorem. In absolute terms, I don't have the calculations right now. That will be a huge amount which they are already contributing. And you look at it, their results will be out. Because of these burdens, I don't think these companies are making a windfall gain. So somebody has to look into these specific issues before deciding. I feel vehemently I'm against this kind of decision. There's no windfall to these companies. And look at the company, like ONGC, making so many overseas investments, acquisition of HPCL, GSPC, and for its own the exploration activities and IOR, UR activities. When once if you levy these kind of taxes, these companies will not remain any this financial means to that carry on these activities, and they can never be the grow. So that will be, I feel, very wrong to levy this kind of windfall tax on these companies.
Mr. Sharma, ONGC, makes roughly 15,000–20,000 crore on net profit every year. But to be honest, this should have been, as a company, the biggest beneficiary of crude price surge. The valuation should have ideally improved a whole lot in the last 1 year that the crude prices are rising. But that hasn't happened. It always has traded at some kind of a discount. Do you think issues like these are the reasons why ONGC has not been able to really get the best valuations in an ideal scenario?
There are two more reasons, I would say. During my time, that ONGC used to be #1 market cap company in India, the highest profit-making company in India. Of late, because of various other pressures coming on the company's financials, they have that position. And I'm missing out something. Can you repeat your question? Yeah, this why the share prices are down. Hello.
Hi, Mr. Sharma. This is Nayantara from New Delhi. This is not our story, and I would like to caveat that I would exercise caution on this story of a windfall gain coming in. 80% of our oil needs are actually imported. So what are you going to really get by a windfall tax on ONGC and Oil India? And what I had picked up from the government was that the oil marketing companies are not going to be spared. They have made record profits in the last few years when the crude prices were very low, falling below $30 to a barrel. So I like to point out, this is not a story of ET Now or any of our reporters. This is being done by PTI. We had reported that the burden would be shared equally by the center, the oil marketing companies, as well as the upstream companies. But I'm sure even Mr. Sharma may not want to admit it on television. The fact is that it's an open secret for all of those that track the oil and gas industry that ONGC perhaps hasn't been in the good books of the establishment since it's not been ramping up its production. There has been a view that it's not been utilizing its cash very effectively. Other private companies that share oil fields and have literally a boundary wall, if you may call it that, have managed to start production 18 years before ONGC has even been able to produce the first oil. So maybe that could be another way the government wants to punish ONGC for not being very effective with its cash utilization. However, it would seem imaginable and more sensible if all the stakeholders shared the burden. Thanks a lot, gentlemen, for joining us. With that, let's return to the markets now. And Pankaj Karde, the President and Head of Institutional Sales and Trading at Systematics, now joining us. Hi, what do you make of the markets now? We've seen a slew of really good results that are coming, whether it's the consumption space. We are midway through the oil and gas results. Do you think we have now enough data for the markets to finally get some direction back?
Hi Nayantara. We are expecting the Nifty to actually see a support of around 10,375 and to see some amount of pullback to come to around 10,600, 10,700 levels. But we believe that there is too much in the market on the macro front, the rising crude oil prices, depreciating rupee, and the geopolitical things that are coming up right now, the sanctions of US on Iran. We don't know what is happening on that side, and the FIs have been continuously selling. So we believe that Nifty is at this point of time can see some amount of pullback to around 10,700 levels, but we can see some amount of correction coming in. Our longer term year-end target remains to around 10,000 levels. So we would be like a sell on rise kind of a market right now.
Arunya as well joining in the conversation. Two-wheelers as a pack is something that you're quite optimistic on, but given the kind of numbers that we saw this time around, while the volumes have been a completely different game altogether, but the financial performance of companies like say TVS has not been that good performance. What is your outlook on two-wheeler companies going ahead? What kind of a growth are you factoring in?
So two-wheeler companies specifically, there has been there is a change in shift of thought process from what the aspirational values have changed for the domestic consumers. Also the rural demand has been continuously improving, and people are moving from a thought process of moving from a 100cc bike to an upwards of 300cc bike. We continuously remain bullish on the two stocks that we have is on the that's Eicher Motors and TVS. TVS more on the margin expansion kind of a story, where we believe that the company is moving from a push strategy to a pull strategy, and at the end of the day, the bikes such as the 310cc new bikes, Apache that is coming up, the Jupiter sales, they are going to continuously go on increasing, and they'll be able to put up a huge margin expansion. On the other hand, we are looking at a stock called Eicher Motors, where we are seeing continuously that the demand is not really slowing down. The aspiration values of people are going up. You'll see the new bike that will come up on the 650cc twin engine. We can add around 10,000 units per month kind of a volume. The exports would be an added advantage for Eicher Motors. So what we have seen is there have been continuous aspirations that are coming up for two-wheelers, and specifically that is why we are holding on. We believe that quarterly numbers are something that you should not really look into, because there would be a lot of things that will come up over a period of time. But from a 3 to 5 year horizon, if you look into, Eicher Motors remains are one of our top bets. The stock is currently at around 30,000 rupees, and we believe that it is it's one of the stocks that you should hold on to your portfolio. Our target is around 37,700 from an FY20 perspective.
Pankaj, I'd also like to get your view on the pharma space, because we've seen a mixed bag really. All the biggies have not been able to perform as per expectations, but why is it that you are bearish on the pharma space? Because most people that we've interacted with say that fundamentally things could actually improve going forward.
So if you see Dr. Reddy's results, we can just take that as an example. We have seen that there have been the pricing pressure in US is continuously there. Although the 483, you might see some going ahead that there would be one thought process that the worst is over. You have everything is factored in the price. But at the same time, you don't have any clarity on what's happening on the US front, the pricing pressure. So at this point of time, I would not like to buy into something which is very uncertain. So if you take a stock like Dr. Reddy's on a valuation terms, yes, we are also a buy on Dr. Reddy's. Our price target is 2,500 on an FY20 basis. But there have been too many ifs and buts for the segment. For the US FDA issues, pricing in US, the demand scenario. So to get into the same kind of numbers and the same kind of valuations that the companies used to get 3 to 4 years back, you will have to either get in a new volume, or you have to have some clarity on the pricing. So I think there are too many ifs and buts at this point of time, and that is why we are not really bearish sort of in pharma. But yes, if you compare it to other segments, I think there are better segments to look into at this point of time, and pharma may not really pick up the way an investor would like to do it immediately. It can be a 3-year kind of a story, but I cannot assure you that it won't correct right now.
Yeah, who knows what's going to happen in 3 years' time. We don't expect you to tell us like that. But, two important counters came out with their results yesterday, Tata Motors as well as Motherson Sumi. What did you make of the earnings? And, those two stocks are certainly in focus in today's trading session.
So yeah, Tata Motors, we have seen some amount of correction happening in the stock as well. There has been a lot of questions on the JLR's performance, they have been facing competition from the electrification, and the demand scenario is looking much weaker as compared to in the past. China remains a strong story. But what we are seeing is there has been we believe that the domestic story is one that can be played for the turnaround. The domestic passenger vehicles as well as the consumer vehicles is something that you need to see going ahead, because that is one segment that has been performing bad for Tata Motors over a period of time. But if you see the new launches in the passenger vehicle as well as the new thought process that they have in the consumer vehicles to increase market share, I think a lot of aggression is coming from Tata Motors on the domestic side, and that is why we believe that one should look at around 290. I think the price is today. It looks a fairly good buy for a large cap auto stock. Our price target would be 450 rupees.
Okay, great. Point taken. Thanks much. We'll let you go on that note, and great chatting with you as always. With that, it's a wrap on this edition of Markets at Lunch. And before we do that,